warm welcome. You joined us on Market Fatafat right here on ET Now. I'm Ashesha Advaryu. With me is Ankita Saxena, and this is a show where we discuss all the stocks that are buzzing in trade. And Ankita, good going for the Indian markets. Nifty is now nearing that 25,200 mark, isn't it?
Yes, absolutely, Ashesha. Good day, breather coming in on the markets after the 4 consecutive sessions of declines coming in. Nifty is above the 25,150 mark. In fact, 25,179 is where the Nifty is perched at. We are trading with gains of 0.3%. In fact, we are maintaining that. We have not seen any dips coming in. We are maintaining that, buying momentum. Nifty Bank also ditto. We are trading with gains of 240 points, 0.4% gain coming in on Nifty Bank as well, and we are maintaining that momentum going ahead. Also, as far as the broader markets are concerned, broader markets were doing very well yesterday despite the correction that we saw on the benchmark indices, and today also that outperformance continues with mid caps trading with gains of 0.6% and small caps also trading almost 1% in trade. In fact, there is a continued outperformance that we see on the small cap front, because yesterday also small caps were the biggest outperformers. Sectorally also, all the sectoral indices are in the green. In fact, the PSU banking names are doing very well. They from get-go, they have been doing well. But for now, the autos have taken the lead. Now, remember, SIAM data had come out for the auto parts, auto counter also. And therefore, Nifty Auto is in focus today. That is a top sectoral gain and trading upwards of 1.3%. So net Ashesha, a good day coming in for the market. Advanced decline ratio tilted in the favor of advances.
Well, absolutely. Good day coming in for the Indian markets. But let's get started with all the stocks that are buzzing in trade today. On the technical side, we have Osho Krishnan, Chief Manager, Technical and Derivative Research at Angel One. And from our research desk, we are now joined by Kanishka and Rabinder. Thanks so much for joining us today. But let's get going then. Axis Bank, that's the first stock we're going to put our spotlight on. And Motilal Oswal has come out with their report where they are maintaining their neutral rating on the stock with a target price of 1,300 rupees per share, where they say that the stock trades at reasonable valuations. The risk reward appears very attractive, and that is the reason they are maintaining their neutral stance with a target price of 1,300 rupees per share. The stock currently trading near that 1164 levels. They say Axis Bank's stock has recovered as significantly underperformed key private players, led by concerns around muted growth, elevated credit costs and decline in return on equity, but the trend is likely to change going forward. They are estimating deposits to report a 13% CAGR over FY 25 to 27 period, but margins meanwhile are likely to remain under pressure in the near term. So that's the view coming in from Motilal Oswal. In fact, they also say that near-term earnings are likely to be on the weaker side, but they expect gradual recovery from the second half of FY 26. For now, they're maintaining their neutral stance. 1,300 rupees per share is the target price, and Axis Bank in focus on the back of that Motilal Oswal report.
Right, that is Axis Bank in focus on the back of that Motilal Oswal report. But moving on to Osho, you picked out GNFC for us. Tell us what do you see on the charts for this one. In fact, it is seeing some good traction today itself. It's trading upwards of 2.5%. What do you see on the charts for GNFC?
Very good afternoon to all of you. Well, looking at the technical perspective of GNFC, then in the current financial year, we have witnessed a higher high, higher low formation on the daily time frame chart. And recently, the counter have retested the 200-day simple moving average around the zone of nearly 570, and from there onwards, there has been some kind of cool off. But in today's trading session, we are witnessing a very strong traction, positive traction in this counter from a very strong support zone of 50-day exponential moving average. So I'm expecting that in the short-term period, we can expect again the zone of 570-75 to get retested in a very short-term time frame, and any breakthrough above the zone of 575 can trigger fresh accumulation towards the zone of 600 from a short-term perspective only. So I expect that from here onwards, the downside is very limited, and on the higher end, I'm expecting 600 to be seen as an immediate target for the counter.
Moving on to the next counter that is in focus today, and that is Rallis India. In fact, Rallis India, it has come out with its Q1 numbers, and there is positive commentary coming out by the management also. Now, Rallis India hopes to grow faster than the industry and is targeting a double-digit revenue growth in 2025-26. Now, Gyanendra Shukla, who's the MD and CEO at Rallis India, said that it is ambitious target because industry grows in mid-single digits, and in April to June quarter 2025, Rallis India reported a revenue of 957 crore rupees, a profit of 95 crores and an operating margin of 15.7%. Now, backed by a timely and well-distributed monsoon, the company is witnessing a broad-based uptick across all three of its business segments: crop care, including crop protection, plant health, seeds and exports. Now, Shukla indicated that while margins may remain steady in the near term, the company is aiming for an EBITDA margin of around 15%, driven by a favorable mix of high-margin seed and plant health businesses. On the back of good set of numbers coming in by Rallis India, that stock is up in a way 2.8%.
Okay, so Rallis India up 2.5%, but another stock that is reacting to its earnings is Tejas Networks. In fact, the stock is down nearly 6% today. Rabinder, tell us what was so bad about the number.
Well, yes, Tejas Network is in focus on the back of their weak Q1 FY26 earning, where company reported revenue at rupees 202 crore as compared to 1562 crore, which was down by 87% on a year-on-year basis, and Tejas Network reported a net loss at 194 crore as compared to a profit of 77 crore on a yearly basis, and EBITDA loss at 136 crore as compared to profit of EBITDA profit at 230 crore, and company's order book stood at 1241 crore, rising to a 22% on a sequential basis, and company revenue declined largely due to delayed purchase order and shipment clearance. The disappointing performance driven by a steep decline in the revenue and the operational metrics. So back of the weak Q1 FY26 earning, Tejas Network is in focus and the stock is down over 6%.
Alright, moving on to the next counter, which is Hero MotoCorp. Osho, you picked out Hero Motor for us. In fact, since yesterday, it's up almost 5%. Strong moves coming on Hero MotoCorp. Tell us, what do you see on the charts for this counter?
Firstly, the whole auto sector is into very strong focus, and I am expecting that there can be strong momentum in the auto sector stocks. Hero Motor specifically has been into a very strong consolidation. From the month of May till now, the counter was into a very strong and narrow consolidation zone around the zone of 4300. But with today's development, the counter have surged above the 200 the simple moving average, and there has been a clear-cut consolidation breakout in the counter because that has been backed by very strong volumes. So I expect that from here onwards, the counter has a potential to test the zone of 4650 to 4700 in the short-term perspective, and one can expect a trend reversal in the counter from a medium-term perspective also, although I am expecting a short-term target of 4700. But if there will be any kind of breakthrough above 4700, then one can expect a very strong momentum in the coming period. So it is at a very strong support levels, and one can look for buying opportunity even from medium to long-term perspective.
Short-term target of 4,700 on Hero MotoCorp and can buy from a long-term perspective as well. But shifting focus to Tata Steel then, Kanishka, what is the news flow here?
Right, so Tata Steel has actually marked the official commencement of construction at UK's largest low-carbon steel plant, hosting the groundbreaking EAF, which is seen as a key milestone in the green transformation of its Port Talbot project in Wales, as per the company's statement. The event was attended by Tata Group Chairman N. Chandrasekaran. Tata Steel says that this project will result in the replacement of coal-fired blast furnaces to scrap-based electric arc furnaces, which has the potential to cut carbon dioxide emissions by 90%. Now, Tata Steel has appointed a number of contractors and consultants for the project, with electric arc furnaces expected to be commissioned by the end of 2027. The steelmaker has already agreed to a power supply agreement with UK's National Grid for the electric arc furnaces, which are expected to produce 3 million ton of steel per year. If you take a look at the stock, however, it is in the red, trading about more than 0.5% lower.
All right. With that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more buzzers on the other side. Stay tuned.
But right here on ET Now, and we have slipped a tad bit over the last few minutes, but despite that, Nifty is still up 100 points near that 25,200 mark. But let's get going with all the stocks that are in focus today. And first up, let's put the spotlight on Oberoi Realty then, where Oberoi Realty Consortium has won a 919 crore CIRP bid for Hotel Horizon. So on the back of this news piece that has come through, the stock continues to be in focus today, up over 1% as we speak, in fact trading near that 1826 odd level. So Oberoi Realty in focus on the back of that news piece.
Realty in focus on the back of that, but coming to you, Osho, you have picked out Max Health for us. On the charts, what do you see for Max Health? If I look at the chart, this counter hasn't really, in the last 6 months, it's given a move of 21%, but in the last 1 odd month, it has been very range bound, if you will. What do you see on the charts for this counter?
See, overall, as you mentioned, that the counter is already into a very strong secular uptrend. And in the recent period, we have witnessed some kind of profit booking from the higher levels. And looking at the technical front, historically also, any kind of dip towards the zone of 50-day exponential moving average has provided very strong cushion to this counter. So I expect that the recent low of 1210 or 15 odd levels should be acting as a very strong support for the counter, while on the higher end, I expect that it has the capability to retest the zone of 1300 in the short-term period. So on the higher end, 1300 will be the immediate target from a trader's point of view. And once it closes above the zone of 1300, then we can even witness further movement towards the zone of 1340 to 1360 in a very short span of time only. So I'm very much bullish in the counter, and any dip towards the zone of the support levels should be acting as a very strong cushion, and one can try to accumulate the counter.
All right, moving on to the next counter, which is in focus on the back of a brokerage note, and that is CAMS that is in focus. Now, Motilal Oswal is maintaining a buy rating on the counter with a target price of 5,000 rupees, which implies a potential upside of 21% from Monday's closing levels. Now, the shares of CAMS can rise to 5,000 a piece as per the brokerage, as the company's non-mutual fund business is gaining traction. Now, Motilal Oswal said that CAMS mutual fund asset under management, or AUM, growth has picked up in the recent past, supported by sustained systematic investment plan, or SIP, inflows and mark-to-market gains. Now, it expects this momentum to continue given the rising adoption of mutual funds as a savings product. Now, direct investing via discount brokers has also gained traction, and with mutual fund penetration still at 4%, the brokerage expects this trajectory to sustain. Now, CAMS is well positioned to benefit from this trend. It said the broker is expecting CAMS yield headwinds to partly offset the 12 to 14% AUM growth, improving traction in the non-mutual fund segments, which has as payments, alternatives, KRA and operating leverage. On the back of a positive note coming in from Motilal Oswal, CAMS is up in a way 2.5% in trade.
Okay, so the stock is up 2.5%, but shifting focus to the IT sector then, HCL Tech. Ravinder, it is recovered from the lowest point of the day, but despite that, weak set of numbers, and the stock is sitting with a cut of nearly 3% as we speak.
Well, yes, HCL Tech has come out with an Q1 FY26 number, and company reported a weak set of number in Q1, and company reported revenue at Rs 30,349 crore, which was flat on a sequential basis, and EBIT was down by more than 9% on a quarter-on-quarter basis, and company's PAT also down approx 11% on a sequential basis at Rs 3,843 crore. And management in the con call said that they have guided revenue guidance increase from 2 to 5% to 3 to 5%, and they have cut the margin guidance from 18 to 19% to 17 to 18%. And Nuvama has come out with a note, and they have downgraded the stock to hold from buy rating and cut target price Rs 1630 from 1700. They say that the weak margin, company reported a weak margin in Q1 FY26, and the guidance cut leave companies with almost zero EPS growth in the FY26. And JP Morgan has also downgraded the stock to neutral from overweight rating and cut target price Rs 1700 as compared to earlier target price Rs 1800. So on back of the weak Q1 FY26 earning, HCL Tech is in focus, and the stock is down 3%.
All right, moving on to the next counter that is in focus today, and Osho, you picked out RailTel for us on the charts. On the charts, what do you see for RailTel now? Obviously, it's in focus on the back of a news flow, but what do you see on the charts for this one? This counter, this has been correcting for the last 1 month. Tell us, what do you see from here?
See, definitely in the last 1 month, there has been a kind of a time-wise correction in this counter, but overall the momentum which we have witnessed in this counter from the zone of 320 till 480 kind of a zone, that was very vertical in nature, and it is expected that there can be some kind of profit booking that can be seen. But with the recent development in the counter, there has been multiple positive crossovers among the EMAs, and even the RSI has given a very strong positive crossover in today's trading session. So I'm expecting that with the kind of a recent development in the counter, after a kind of a consolidation, there is a potential for re-strengthening in the counter, and I expect that in the short-term period, the counter can retest the zone of 460 to 465 in a very short-term time frame, while on the lower end, 400 is a very strong support for the stock. So I expect that the risk reward is very much favorable for a short-term trader, and one can look for a buying opportunity in this counter for target price of nearly 460 to 465.
To 465, that's the target coming in for Railtel. But let's just also shift focus to Ola Electric then. Kanishka, the stock is up 22% in the last two trading sessions. And what are brokerages making of the results that it announced yesterday?
That's right. So Ola Electric did report a weak set of numbers for Q1, but its guidance for the rest of the year, that remains strong. In fact, brokerages, they are divided when it comes to Ola Electric. Kotak and Ambit, they remain bearish, citing a sharp drop in market share from 46% to 19.2% year-on-year in the quarter, and also rising losses. Kotak has a sell rating with a target price of 30 rupees for the stock, whereas Ambit, that also has maintained its sell rating with a target price of 40 rupees, highlighting weak execution and high competition in the EV space. On the flip side, we have global houses like Goldman Sachs and Citi that are more optimistic on this particular counter. They see value in Ola's strong FY26 guidance, including a revenue outlook of 4,200 to 4,700 crore rupees, and expect auto EBITDA to turn positive in the year. Now, Goldman Sachs, that has retained a buy rating with a target price of 63 rupees, whereas Citi, that sees the stock at 55 rupees, backed by product innovation and long-term EV potential. On the back of these reports, the stock is in focus. Remember, the stock did rally a lot yesterday after the results, but today it's witnessing a downtick, down more than 4% at this point.
Ola Electric in focus. On the back of that, the stock, of course, has given up all of those gains which it registered yesterday, now down nearly 4%. But shifting focus back to the real estate sector, then Brigade Enterprises, this one is in focus on the back of their fundraising plans, where the board has approved fundraising to the tune of 1,500 crores. This will be done via non-convertible debentures. So on the back of this fundraising plan, the stock is in focus, up 0.6% as we speak on the back of that.
All right, moving on then to the next count that is in focus today, and that is Sun Pharma. Ravinder, take us through what's the news of Sun Pharma.
Well, yes, Sun Pharma is in focus. Our company has announced the launch of a specialty product Lexelvi in the USA, and company also announced the settlement of a patent dispute around it. Lexelvi is approved by the US FDA to treat epilepsy erythema, and it is used for the disease causing hair loss, and usually in the small round matches. The disease affects 70,000 in the US every year, and the product demonstrated a rapid result in the clinical test. And as per Elara, the estimated the product can become a $200 to $300 million opportunity in the next 3 to 5 years from the launch, and it could become the second largest production for Sun Pharma. So back of this, Sun Pharma is in focus, and the stock is holding a gain of more than 2.5%.
Okay, so Sun Pharma up over 2.5% on the back of this news piece. So this stock from the pharma sector in focus. But that's that fundamental view. Technically, Osho, where do you see the stock headed?
Again, yes, as on the back of positive news, I expect that there has been a strong traction in this counter. But looking at the technical front, we have witnessed a consolidation breakout in this counter, and the immediate target comes around the zone of 1745 to 1760 kind of a zone. So from here onwards, one can even look for buying opportunity in the counter. But overall, the whole pharma space or healthcare space is looking very lucrative at current levels. And after a very brief halt or consolidation in this counter, this has started gaining traction once again. So any breakthrough above the zone of 1745-60 kind of a zone can bring strong momentum in the counter, and I expect that on the higher end, the next potential target that one can expect in Sun Pharma is nearly 1820 to 1840. So overall, at current levels, it is at a very favorable risk-reward ratio, and one can look to accumulate the counter for short to medium-term time frame.
Moving on from Sun Pharma to the next counter that is in focus, and that's HDFC Life on the back of its Q1 results. Now, it is going to report its Q1 numbers anytime today, and What we are really expecting? Well, HDFC Life's total APE is likely to grow at 13.7% on a year-on-year basis to 3,259 crores, driven by a low double-digit retail APE growth. And the VNB is expected to grow 15.2% on a year-on-year basis to 827 crores, while the VNB margin may expand slightly to 25.4%, which is a 33 bips year-on-year growth, aided by expected stable product mix. What are the things now to watch out for? Really, we need to watch out for the product mix, the margins, and any guidance on sales through bank and agency channel. On the back of that, before the results, in fact, HDFC is reeling under selling pressure with cuts of 0.6%.
Okay, so ahead of its results, the stock is slightly under pressure, but shifting focus from HDFC Life to Voltas then. Osho, what will your view be on the charts? The stock is currently trading at 1391 odd levels, 1450 on the annual, is it?
See, overall, this counter have started gaining a gradual traction from the zone of nearly 1280, 1300 kind of a zone. And from there onwards, there has been some kind of positive momentum in this counter. But overall, the technical structure is very much positive, and I expect that in the short-term period, the counter has a potential to test the zone of 1450 to 1500 kind of a zone. So one can definitely look to accumulate this counter at current levels, and any breakthrough above the zone of 1400, that will be the first and very intermediate hurdle for the counter. But any breakthrough above 1400 will give a very strong boost for a higher target of 1450, followed by 1500 in the short-term period. So overall, the technical structure is now restructuring towards bullish momentum, and I expect that in the short-term period, one can definitely expect a decent run in this counter towards the zone of 1500, that is coinciding with the 200-day simple moving average.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll get you more buzz on the other side. Stay tuned.